Hi, my name's Kash. I'm a senior associate in the employment team at Right Hassle. I've done a few FAQs last time round, so I'm going to do the same this time round. Again, it's just a few FAQs that I usually get asked by our company clients. From a legal standpoint, you can't include notice pay in an ex gratia payment. A lot of employers used to do this many years ago, but in 2018 they changed the rules on this. Anything taxable under the contract, so notice pay, holiday pay, bonus, commission, should all be taxed at source. And then you have your ex gratia payment, which is 30k tax free. Anything above that amount will be taxable. You don't have to wait until an employee returns to work to carry out that meeting. If the fit note will stipulate they're not fit to return to work for a specific period of time, it won't necessarily state that they're not fit to attend meetings. So it's good practice to speak to the employee to see if they are fit to attend a meeting. If they can't come to the workplace, you can either agree an alternative location, or alternatively Microsoft Teams or Zoom. Any virtual platform will suffice. Again, if they're still not agreeing to that, you can potentially refer them to occupational health to determine whether they are fit or not to attend a meeting. You can make a decision in an employee's absence. The best way to go about this is offer at least two opportunities to attend that meeting. So for example, if you've invited an employee to a disciplinary hearing and they fail to attend that one, you will then send another invite letter out, and in that invite letter stipulate if they fail to attend this hearing, a decision may be made in their absence. That's best practice and probably the best way to approach that. An employer can deduct from an employee's wages if they do damage company property, only if there is a written agreement in place. I would usually recommend inserting a clause in the employee's contract to stipulate circumstances when the company can deduct from an employee's wages, and it's vital to ensure that the employee has signed that contract. Alternatively, if there's another written agreement in place, that the employee has signed that agreement. That will allow the employer to deduct from an employee's wages in those circumstances. It all depends on the terms of the bonus scheme. If there's no scheme in place and the employer's just paid this bonus every Christmas, then it's likely employees will argue it's an implied term of their contract and they are due a bonus every year. However, if there is a scheme in place which clearly stipulates it's discretionary, an employee can use discretion and seek to rely on that. But ultimately, it does come back to the fact that if an employee has received that bonus every year for 6 years, it's likely to be an implied term, and it may be difficult for the employer to enforce that they are using their discretion to not pay it this year, although it is possible. Thank you for watching. If you've got any further questions, just drop them in the comments or drop me a message. If you want me to cover a specific topic, again, just drop it in the comments or let me know. And my next video, I'll make sure I cover a specific topic.